In our industry, which is predominantly about people, the way we need to embrace technology is to see it as something to support those dialogues. So rather than saying it's digital only, never ring us up, you'd expect to put digital in, and as clients use the digital service, brilliant. But if they get halfway through and get stuck, you'd expect them to ring and get advice. Equally, the role of technology in accelerating the productivity of the banker or the advisor. How much are we using technology to help that banker make insightful challenges to the client and next best actions in terms of what they ought to do. So that bankers aren't doing lots of paper-based research themselves. The system helps them with that.
So integrating technology is definitely a challenge, but I think we shouldn't be frightened of it. And I think the one thing that I would note is that technology and the human element don't have to be mutually exclusive. We should be able to use technology to deliver the best service to clients, to think better rather than necessarily thinking faster. So for us, that's in terms of giving clients access to apps on devices to enable them to view, to communicate, to transact, but also allowing our relationship managers to use technology to give better advice more efficiently, but really leaving that human element that they are doing the bespoke piece and they are delivering that message to clients.
The adoption of technology in a human-led industry is always a challenge, and to me it's that there are kind of different ways it can go about it. If you want to adopt technology, you need to empower and make sure the relationship managers, the advisors, are all brought into the process, and they see it as complementary to what they do rather than a competition. You don't need your sales force wandering around saying, I'm going to get replaced by a robot, let's go out. It's about making their jobs more efficient, taking the tasks that they don't want to do or are annoyed by doing. Be it the onboarding, be it the actual annual review process, the things that are the meeting notes, simple things that technology can actually enable, digitize and make more efficient, so the advisors can do the bits they actually enjoy and care about and are good fun and talking to clients, but also actually increases profitability because they can have more engaging conversations with clients, they can spend the time getting to know them, they can spend the time bringing in new clients.
In order for us to be able to adopt the technology in what today for us is a human-based industry, we've got to have some very sophisticated technology that is easy to use. I don't think we're ever going to get away from people needing to speak to someone when they're dealing with serious matters of finance. But we can use technology to help that as well. Skype or other type of video calls I think will become important to save our customers from coming to see us or us having to go and see them. So I think we can use that technology to help us with the face-to-face aspects of the business.
I think we're probably the first, second generation of what we are seeing are services that are being provided in a tech space. We've got several generations and evolutions of this technology to come. As we're touching on at the Market Force event today, there is going to be a real subtle blending and merging of where the human is involved in helping the consumer and when technology takes over. We've coined it as bionic. I think the notion of robo is getting rather old-fashioned. We need to move into a vision that the hybrid advice model, where really it becomes almost subliminal to the user, that tech is helping them. They're actually talking to a wealth manager.
So I think the technology adoption question is a perennial challenge. As an industry, we're slow. That's come up several times. I think we're slow for a lot of reasons. We're slow because of just a lot of legacy systems. I think we're slow because there's a perception that clients don't want it. There's a history of our clients being sort of on the older side of the spectrum and in theory not wanting to engage in it. But I think we're all seeing that that's just not right, or at least it's not going to work in the future. Here, smaller firms and newer firms have an advantage because they don't have all the legacy issues. It becomes more cost effective to more quickly try and dive into making those changes. So there's a bit of an advantage. Whereas actually some of the bigger firms have a capital advantage, right? I think the big change is going to come hopefully in the next couple of years. There was a conversation earlier about how much capital is being deployed on a digital or systems basis just for the requirements, just for basic remediation, for regulatory required things. And as you hopefully start to crest that and start to have sort of more discretionary spend around doing things that are more for client outcome, even more for business efficiency, hopefully you'll see an unlocking of both innovation and capital to accelerate from where kind of the behind position that we're in.